Hi guys, welcome to my channel. Before we get started, make sure to hit that like button and also subscribe to my channel. How is BlackRock going to reinvest their $1 trillion profits this year? So make sure to watch the full video. BlackRock Incorporated, Blocks.n, reported an 18% decline in fourth quarter profit on Friday due to a global market crash that reduced fee income. But the company saw $146 billion in long-term net inflows during the period as equities and bonds recovered. Businesses like BlackRock, which derives the majority of its revenue from fees on investment advising and administration services, were impacted by the financial market instability that was caused last year by a quick rise in interest rates and recession fears. Yet, the fourth quarter saw a surge in equities and bonds due to anticipation that the monetary tightening measures taken by central banks around the world would slow down as inflation began to recede. For every one of our clients, 2022 was a year of transition and a challenging market environment, according to Larry Fink, chairman and CEO of BlackRock, in a conference call. Notwithstanding recent cooling, he stated that inflation remains a key concern and that global growth was slowing down. The adjusted earnings for the largest asset manager in the world fell from $1.65 billion to $1.36 billion, or $8.93 to $10.68 per share, in the 3 months ending December 31st. IB's data from Refinitiv shows that analysts had projected an average profit of $8.11 per share. By the end of the fourth quarter, assets under management, AUM, were $8.59 trillion, up from the third quarter's $8.96 trillion but down from the year-earlier high of just over $10 trillion. BlackRock stated in a statement that reduced performance fees and the effects of dollar appreciation on average AUM were the main causes of the full-year revenue reduction of 8%. BlackRock reported a $91 million restructuring expense in the fourth quarter as a result of the 500 job cuts, or around 2.5% of its staff. On Friday's conference call, Chief Financial Officer Gary Shedlin said, "We recently restructured the size and shape of our staff to free up investment capacity for our most significant growth initiatives. We now anticipate our headcount to be largely flat in 2023. He continued. Politicians in the United States, both liberal and conservative, have increased their pressure on the firm about its positions on matters like climate change and workplace diversity. Fink reaffirmed on the call that the business only looks out for the interests of its clients. When it comes to how we handle our clients' money, some of these folks have indicated that we are either too conservative or too progressive. We are neither. I'm just going to say that as a fiduciary," said he. In late Friday morning trade, BlackRock shares fell by about 1% to $747.30. In the fourth quarter, BlackRock had long-term inflows of $146 billion, up from $65 billion the previous quarter. Accounting for cash management outflows resulted in net inflows of $114 billion overall. The majority of inflows came from fixed income products. In the third quarter, net flows into bond funds and exchange-traded funds, ETFs, totaled $115 billion. Kyle Sanders, senior equities research analyst at Edward Jones, stated that he believes the current strength in fixed income is only the start of a multi-year trend of capital returning to bond products. BlackRock generated long-term net inflows of $393 billion for the entire year 2022. BlackRock reported a $14 million year-over-year rise in technology services revenue and a $15 million increase from the prior quarter as a result of demand for the Aladdin investment management platform. The world's largest asset manager's long-term fundamentals continue to perform strongly. Major market indices have fallen in 2022 as investors have become more worried about the Ukraine crisis, ongoing pandemic worries, high inflation, and the possibility of a worldwide recession. In the first half of this year, the S&P 500 index has dropped 18.8% in the short term. The asset management sector has perhaps been affected the hardest by the present weak market. In contrast, the market leader BlackRock, Block's 1.36%, appears to be in a great position to weather the current market storm. To understand why it might be an excellent long-term investment for income investors, let's examine the company's fundamentals and value when there are net inflows into BlackRock funds during a bear market. As of September 30th, BlackRock was the leading asset manager in the sector, with assets under management, AUM, of slightly under $8 trillion. Retail investors, i.e., non-professional investors, and institutional investors can choose from a range of products that the company offers, for example pension funds and insurance companies. They include innumerable passive and actively managed funds for institutional investors worth $3.8 trillion as of the end of the third quarter, together with more than 1,000 exchange-traded funds, ETFs, that made up $2.6 trillion of total AUM via its iShares brand. The third quarter's $4.3 billion in overall revenue for BlackRock was down 14.6% year-over-year. Investment advising fees decreased during the quarter as a result of the company's average AUM falling by 11.5% to slightly under $8.5 trillion. BlackRock's double-digit reduction in total revenue is due to this, as well as a 76.2% year-over-year decline in performance fees to just $82 million. Non-GAAP, adjusted, diluted profits per share, EPS, as reported by the firm, were $9.55 for the third quarter. This was down 15.8% from the same time last year. To put things in perspective, despite cutting expenses by 10.6%, BlackRock's lower revenue could not be made up for. The company's net margin decreased by 100 basis points from year to year to 33.7% as a result. In order to partially make up for its decreased profitability, BlackRock retired 1.5% more shares than in the prior year. The asset manager's quarter seemed difficult at first glance. However, beyond the upcoming quarters, there is definitely cause for optimism. BlackRock reported a $17 billion net inflow of capital in the third quarter despite the market collapse. The net client outflows of $24.6 billion at Dividend Aristocrat T. Rowe Price, TRO 2.10%, during the same period were a significant improvement over this. This implies that BlackRock won't be far from surpassing $10 trillion in AUM once more, as it did in 2021, once equity markets eventually recover. Analysts predict that BlackRock will achieve full-year adjusted diluted EPS of $40 or more as early as 2024. For this reason, its previous high was $39.18 in 2021, so this would be a little higher. Near-trough earnings are more than sufficiently covered by the dividend. In contrast to the S&P 500 index's 1.7% yield, BlackRock's 3% dividend yield offers a nice starting income. Furthermore, the company's dividend still appears to be safe, despite how challenging the environment has been for it. BlackRock's dividend payout ratio will be around 57% in 2022, which explains why. This is a respectable payout ratio because asset managers don't need much capital to keep their companies operating. However, as financial markets eventually recover, I think management will attempt to lower it a little. Thus, BlackRock's dividend growth in the upcoming year or two will be minimal, but the starting yield already makes up for this fact, an acceptable starting point for the long term. The company is well positioned to survive this challenging environment, just as BlackRock did during the Great Recession more than 10 years ago. At its current share price of $649, the stock is also fairly valued. The trailing 12-month, TTM, price-to-sales, PS, ratio for BlackRock is 5.3, which is the same as the 10-year median TTM PS ratio of 5.3. As a result, income investors should choose this stock. Should you make an immediate $1,000 investment in BlackRock? You should know this information before considering. BlackRock didn't make the list of the top 10 stocks, according to the Motley Fool Stock Advisor analyst team, which was just released. Since 2002, the stock market has been outperformed by Stock Advisor by a factor of 3. They believe there are 10 stocks currently a better buy than the others. So, that's it for today. We hope you enjoyed the video. Use the comments section below to tell us what you think about the video. Also, make sure to subscribe to our channel and click the bell button to be notified of all the latest videos.